trillions of dollars will flow into Stellar XLM and cryptos, other blockchains like Stellar XLM. And you really have to ask the question, how is this even possible? Well, I just got to tell you that back in 2010, there were literally zero, including myself, zero believers that there would be a crypto industry that would have a market cap of at least $1 billion. Realize that the market cap for cryptos is over $1 trillion and has been holding for several months and is highly likely and highly anticipated to quadruple. It's done so already, in theory. It's had a 3x already from where it is, and it's going to go much higher. How am I deriving at this? How am I making sense of a multi-trillion-dollar crypto market? How is it possible? We're in a bear market in cryptos. You've only got to be 20% lower from its previous all-time high to know that it is a bear market. It has trended down for some time, but we've now had some upticks with other cryptos like Ethereum Classic and some others, but the major altcoin market has not had its run yet, and we are waiting on the sidelines ready. But again, how am I deriving? Where is this money coming from? How am I deriving at this conclusion? Well, if you don't know yet, and I've covered Ray Dalio before, you need to check out and see what Ray Dalio is saying about stagflation. Stagflation is the key to, unfortunately, a prosperous crypto market, still based on speculation. And it's clear that with these new bills coming out, it is a way to turn the printers back on. It is a way to keep the people subdued with social checks because of high inflation. Now, I want to pass you over to somebody that I've been watching for some time now, Max from Stoic Finance. He covers Ray Dalio very well. It's very informative, and he has a lot of decent, educated information about the economy, finance, politics, what's going on in the geopolitical world that determines where we are today. Max, over to you.
Is a billionaire hedge fund mogul. He founded Bridgewater Associates, which is at this point the largest single hedge fund in the world. He is, to say the least, insanely successful and one of the best investors to ever exist, and one of the best businessmen alive as well. When he speaks, people listen, and for good reason too. We're going to look at exactly what he said about stagflation. We're going to look at an economic prediction that he made for the US over the next few years that has an awful lot of people very worried. So what exactly did he have to say?
Are we close to having stagflation?
Yeah, we are in stag.
We are. Stagflation is simply where, you have inflation, and yet at the same time, you have high unemployment.
Yeah, you have economic weakness.
Right.
In other words, you have a stagnant economy. Essentially means
meaning growth is reduced.
Low growth, and with high inflation. And that happens through this monetary situation that I'm describing, in which the central bank tries to deal with a middle course. In other words, what does the central bank want? Not too high inflation and not too low growth. And so when there's a lot of debt, because one man's debts are another man's assets, it becomes very difficult balancing act. And that is when you have stagflation, social programs and so on. We wrote too many checks relative to the money we had in the bank, which was gold at the time. 1971, the devaluation. then they print a lot of money into that stagflation. So stagflation is is the middle course. Right. So think about it this way. How does he literally fight inflation? Because everybody says tight money policy. And how do you fight inflation? Well, the way that happens is you get people to spend less by taking money and credit away from them. So he will reduce the amount of money and credit that's available. The Federal Reserve is going to sell $1.1 trillion of debt that it has, debt assets, bonds. And then they're going to raise interest rates. So they create a squeeze that reduces demand at the same time as people don't have enough money because inflation is high. So that squeeze,
and their buying power is less.
That's right, because inflation is high, the buying power is less. And then what that act is to reduce buying power again, to reduce inflation, but it comes at a big cost. And that is stagflation.
So the first thing to note there is that actually a lot of people get stagflation wrong, and that leads them to not really understand why we're talking about it today. Many people say that it has to be high unemployment that characterizes that economic stagnation, but that just simply isn't the case. It's simply a struggling economy in general, which is often characterized by a poor job market, but that isn't essential. Dalio is right that stagflation is already here because a recession is already here in the United States right now. There has been so much news recently about Biden and the Democrats in general trying to convince the world that they've changed the definition of a recession. Now, what is Dalio's terrifying prediction for the next few years then? Well, he thinks that we're in for another sustained period of stagflation. Basically, the Federal Reserve's middle course that it's trying for is the same kind of thing as what we saw happen in the 70s, where the Fed is now aiming for a balancing act, trying to bring inflation down, but without damaging the economy, which will simply enhance pain in the future. This is almost exactly what happened in the 70s. The government and politicians themselves and the institutions as well sought to tackle inflation, yes, but they didn't want it to damage the economy, and so they weren't willing to actually go far enough to have any real impact. They didn't want to take money away from people even though it's the only real way to improve things in the long term, and as a result they extended this massive amount of pain that stagflation caused for over a decade and made the whole thing so much worse. Now, there are two big things happening right now which should send alarm bells ringing in your head, making it very clear that we might be on the exact same path that we saw in the 70s and the 80s. The first thing is that the market is pricing in a Federal Reserve pivot. This has been happening over the entirety of the last 6 weeks of trading. Asset prices have been going up, all based on this idea that the Federal Reserve will stop hiking interest rates, they'll turn the money printer back on, they won't even ever start quantitative tightening, and business will boom as a result of that. The market thinks that this is going to happen because in its view, inflation is already over and it isn't a problem anymore, which just goes against all viable data. In reality, what will happen if we see the Fed go this direction is yes, the economy will boom, but so will inflation, and we'll find ourselves in the exact same situation that the US found itself 50 years ago, with an economy whose prices are spiraling out of control.
And Max goes on and claims that because the US government are spending on a so-called inflation reduction bill, linked to the climate somehow, okay, to the tune of around $370 billion, that it is in itself inflationary positive. That is going to cause inflation in itself. And when you have the Fed that is increasing interest rates quarter by quarter, you could see the funnel there, right? The man is getting squeezed, and therefore, if we have those two coupled together, we have what you call stagflation. And stagflation is terrible for the economy. That is going to keep the economy actually not producing much at all. So we have this small GDP growth, barely anything. In fact, it's going to flip on itself and go negative. So you have a recession, okay? And with that, what you could see from stagflation, the signs of it, how you can tell, is because bond yields are still extremely low at 2.8%. Inflation is up at 8%. Okay, and therefore You're going to get big tech companies like Apple and Google, who are already doing so, they're going to do their stock buybacks. They're buying back their corporate bonds, which is going to increase the value of their stock. This is what Max is talking about. So really, give Max a follow. Check that video out. It's in the link in the description. And actually, because this is positive for the stock market, it's positive for the Dow Jones, this is going to have a knock-on effect. Other companies are going to follow suit, and therefore we have a stock market valuation that increases on itself, right? And if the tech sector is doing well, the Dow Jones is doing well, inevitably cryptos will move up and trillions will flow. So without further ado, if you enjoyed this content, you should join our community. Join zioncoin.org.uk. The link is in the description. Join a VABC project. If you're a developer and you like to develop new applications, there's a VABC project for you. Social media project for you. Think tank project for you. So if you've got ideas about applications that you want to build out, work with the devs and make it happen. If you just like blogging, there's a VABC project for you. So it's all free, it doesn't cost you anything, and you'll get free Zion coins. Now, don't forget to pick up a ledger or a treasure, or even both. It's so important that you keep your assets on your own with your own cold storage wallets. Check out the link in the description. Pick up a ledger or both, a ledger and a treasure. Become your own banks. You're going to need to check out this next video if you enjoyed this content. It's on the latest of Stellar XLM and Zion coins. And if you like this content, smash the Zion coin up there, like and subscribe. It helps us with the YouTube algorithm. And don't forget to share, because sharing is caring. I'm Nathan, aka Nathan of Zion. See you in the next one. Have a great day. Take care now.